CLSA has come out with a very interesting note on Power Grid. What they're saying is that Power Grid has announced an interim dividend of rupees 5 per share from the 5.96 per share that it had announced last year, and CLSA had actually estimated around 6.5 to 7 rupees per share to be the dividend. However, what actually CLSA is saying is that given the fact that this time around Power Grid board approved the interim dividend of 5 per share in December versus last year's announcement in March is something that is quite notable. What they are saying is that the Power Grid is now moving towards a more stable policy of actually declaring dividends. They believe that dividend declaration will now be spread evenly, and this is against the lumpy dividend policy that the company maintained in the past. So now what CLSA says is that Power Grid will start declaring dividends in an even spaced manner, and earlier what Power Grid had was that it had a lumpy dividend policy, a one-time dividend policy, typically towards the end of the financial year. Now what you're actually looking at is you're talking about CLSA actually saying that the company is an extremely attractive investment at this point of time. They believe and they remain confident that their FY21 dividend estimate of 11.5 per share is something that they are still maintaining. They believe that when you're talking about Power Grid, it is well on track to achieve capitalization that is much higher than its Capex in FY21. They also see little downside surprises to their 55% rise as far as estimated dividend is concerned, making this stock quite attractive in terms of a dividend yield. They believe that a 5.9% dividend yield in FY21, and almost, they're anticipating a rise to 7.8% dividend yield in FY23. They've also gone ahead and lifted their target price from 215 to 225. As they believe there are a couple of key factors that are working for Power Grid at this point of time. Company is consistently trying to improve its ESG quotient, and that is increasing its attractiveness to ESG investors. They're also maintaining the fact that the company's inexpensive valuation at 8 times FY22 price to earnings, as well as the visible dividend yield, is something that is making them maintain their buy stance. Now going forward, what they believe in terms of the dividend yield, they believe that Power Grid is most likely changing its dividend strategies to 3 dividends in FY21 instead of the normal 2, and could even further go towards regular quarterly dividends in FY22, and they believe that this is something that should increase its appeal to dividend yield investors who seek regular dividend payouts and would consider it on the lines of an infrastructure trust, that is an InvIT or even a REIT. So now what they're saying is that look at Power Grid either as a REIT or as an investment InvIT, and this is something because the fact that they believe going forward Power Grid could actually deliver consistent dividend yield as far as the investment